Hey guys, this is Hussein, and in today's video I'll be showing you a different kind of strategy. So I received some queries regarding the Martingale strategy, so I just wanted to show them to you guys on the MetaTrader platform. So currently I'm using the MetaTrader 4, and let me open a chart. So this is a euro dollar chart, and we can change the time from here. So basically in the Martingale strategy, actually you can apply the Martingale strategy on the top of any other strategy, right? So for example, there is a strategy. So I'm just telling you this strategy as an example. Let's drop an indicator here. So let's say that we are using the very common indicator, that is RSI with the period 4. So RSI is basically the relative strength index, right? And there's a strategy which is like, for example, let's say that I am making it, for example, let me change the period to 10 so that we get a better description of what exactly I am about to say, right? So this is the 4-hour chart. Let's say that the strategy is whenever the value of the RSI goes below 30, right, we are supposed to open the buy trade, and whenever the value of the RSI goes above 70, we are supposed to open the sell trade, right? So that's a strategy. And now we are going to apply the martingale on the top of this strategy, right? So martingale is kind of a concept which you can apply on the top of any strategy, right? So let's say that we are talking about this particular scenario here, and in this particular scenario, let me just make it like that. Okay, so in the particular scenario, if you look at here, right, so you will see that, okay, this is the candle on which the RSI crossed 30, below 30, right? So we are supposed to open a buy trade here, right? So someone will open a buy trade here, but with some, let's say, lot size maybe 0.01, right? Maybe 0.01, right? So what the martingale strategy is, basically, if you are in loss and the probability of your strategy is so much that it will be there's so much probability that it can go in the same direction, right? Then what you are able to do is, let's say that not on this candle, maybe after a little bit interval of time, you can open another you can execute another trade, right, just below some point. So for example, in this example, what we are doing here, for example, we are opening another buy trade with a distance of, let's say, 500 pips. So I'll explain that in another video, that how that pips and those points are basically calculated, right? And let's say that if the price goes down to this point here, right, we open another buy trade, and let's say that we are still in the losing trade, so we keep doing that, right? Obviously this brings a lot of drawdown, right? But this is also a useful strategy, that when you open a new buy trade here, you open it with a higher lot size, right? So for example, let's say that your take profit is let's say that 1500 points. So for example, here you open the trade, and this is your target, that when you get to this point here in profit, you will close the trade, right? But now you go in loss, and now you open the trade, let's say, with a double lot size, right? Then obviously, if you uh, want to take the same profit that you wanted to take from this single trade, right, now if you want to take the same profit from these two trades, then obviously your lot size is 3 times bigger, right? So the distance here will be reduced to 3 times. So this take profit will not stay here, but it will just go here, right? And same is the case, that if for example, if you go like 500 points opposite in the same direction again, right, that means that you are now opening another transaction, another trade with a double lot size than the previous one, right? So for now you are open with, let's say that if you are doubling the last opposite open position, so that was already twice the first one, so this one is like 4 times. So you are in now total 7 positions, so the take profit will now reduced 7 times to this, right? So it will might just drop to somewhere here, right? And as you can see that now this point is much closer as compared to the initial point, right? So there is so much probability that we hit to this point very fast and very soon. So that is basically the main concept of the martingale, and you can apply it on the top of any strategy you have. and of course that will bring a lot of drawdown. So you need to make sure that you have enough capital, that your position is not liquidated, or you have some margin left to make that transaction. So I hope you guys understood the concept and like the video. So just comment me if you want more educational videos. Thank you.